Hello, everyone, and thank you for taking the time to review the Morgan Hill Real Estate Market Analysis for April of 2009. My name is Robert Whitelaw. I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. Now, if you'd like to get in touch with me, if you'd like to check out any of the other articles I've written on real estate, watching the other market videos I've produced, or listen to my weekly podcast, you can find those at www.soldbyrobert.com. If you'd prefer to contact me via email, feel free to send those to robert@soldbyrobert.com. If you prefer to contact me by phone, just dial 408-852-0525. And if you prefer to use a instant messaging program, I'm available on AOL Instant Messenger, Google Talk, and Yahoo IM at the screen named The Rebel Broker. And for Skype users, I'm available as Rebel Broker. Referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate in Silicon Valley, feel free to get in touch using any of the methods I've outlined above, and I'll be happy to help you in any way I can. And if you are interested in buying real estate somewhere else in the United States and you'd like me to track down the perfect agent for you, just get in touch, let me know what you're looking for, and I'll find the right agent to fit your needs. Now let's go ahead and jump in and take a look at the supply and demand numbers for Morgan Hill. This is another month of pretty good news for Morgan Hill residents. The market has apparently taken a turn, and it has taken a turn towards a little bit more balance, a little bit less panic, I think, for sellers. Prices are still challenged. I mean, prices are still down. And, frankly, they ought to be, given the crazy increases in value we saw in earlier years. But the inventory numbers, as you can see from these statistics, are pretty darn good. We're heading in the right direction. It's a continuation of what we've seen over the last couple of months. So we can't call those previous months just, odd months out. This is clearly now a trend. Inventory is down 26.35%. That's 88 fewer homes on the market in April of 2009 than in the same time last year. And let me just point out, this chart does not point out previous months. This is just the month of April going back to 1999. So there's no seasonal influences here. This is all strictly whatever the market was like in the same month for each of these years listed. Let's see, and then the total homes on the market right now in Morgan Hill are at 246, so that's a pretty good dip from our high of 300 last year. Now let's go ahead and take a look at homes listed in the month of April. We can see this number has steadily been going down since 2007. Good to see this number going down. It helps contribute to an overall decrease in inventory. It's actually down 21.62%. That's 16 fewer homes listed in the month of April in 2009, and at the same time in 2008. That gives us a total of 58 homes that were listed in April of 2009. Now let's take a look at the sales numbers. This is also very good news, and it is the first time for the month of April that we're seeing a change in the trend. Now look at that trend going all the way back to 2004, where we had an exceptionally balanced market. In fact, it was obviously very much of a seller's market. Sales accounted for what looks like over half of the inventory that was out there, which is definitely weighted towards sellers. Then we started to see that steady decline each and every year going down, with inventory just shooting through the roof. Now we've sort of seen this turnaround where sales are up, and this is yet again another month where sales are up. So again, we're calling this a trend, not just a one-month aberration. Sales are actually up 52%. That's 13 more homes sold in April of 2009 than April of 2008. So that's really great news. That gives us a grand total of 38 homes sold in the month of April. Now, the next thing I'd like to talk about is the ratio, and that's the relationship between the total amount of homes on inventory and the total number of homes sold. And there's two ways of looking at it. One is, if you're a seller, it gives you an idea of how much competition you have for every home that sells, how many homes are there on the market. It also gives you an idea of how many months worth of inventory we currently have on hand. So if you take the inventory and divide it by the total number of homes sold, that'll give you an idea that if inventory numbers froze as they are now and sales numbers froze as they are now, how long would it take us to sell off everything currently in stock? Well, that would be 6.5. So looking at that number from the inventory standpoint, it's the sell-off standpoint, it would take us 6.5 months to sell off the inventory in Morgan Hill if everything froze as it is now. If you're a seller, think of it this way. If you're trying to sell your home, there are basically 6.5 other homes also trying to get sold. So if your home was to sell, you'd have to beat out 6.5 other homes in order to get your property into escrow. Now, what's interesting is that last month that number stood at 8.86, so it's a fairly substantial drop. And just think back just a few months where we had double digits of the ratio, where we were as high as 16. I can remember months in the past where we're creeping up to 20. So this is actually very good information. It's a good market indicator, and it's definitely headed in the right direction. The county was 5.4. So we didn't beat the county numbers. The county average is still better than we're seeing in Morgan Hill. But no matter how you slice it, that's good news for sellers. And it actually shows a little bit more of a balanced market. Now we'll see that the thing that we've always talked about, what was going to finally bring this market into balance, it's pretty much always been price. And we'll see that is still something that is an interesting number to look at. It's changing, and we'll take a little bit of a closer look at that in the upcoming slide. Now let's go ahead and look at the same numbers for supply and demand, but now we're looking back months. So we're looking straight back. We're not skipping year to year, and we're seeing all the way back to November of 2007. And first we'll look at the inventory numbers. And the first thing you'll note is the trend line that's up there at the top. That sort of gives an idea of what direction inventory is going. And you can see that it's been trending down a bit. We've obviously are still suffering under some of the statistics from 2008 where inventory was so alarmingly high. If we look back in the months preceding April of 2008, we can see that we actually have sort of an inverse relationship. Now as we ramped up to 2008 in April 2008, we had inventory steadily climbing to that point. Well, this year we saw a steady decline from February. So February and March both were declining months in relation to April this year. Last year, the opposite was true. So we're clearly in a pivot moment, in a transitionary moment in our market. What can we see in the future? Well, I don't think the numbers from last year can really inform us too much about where we're headed. I actually think that we may see one more month of a potential possibility for inventory numbers to go up, or maybe even stay the same compared to the month of April, simply because we may see folks starting to jump in to sell their homes in this market. I don't think the news has gotten out that things are better. The average folks I bump into out in the street are still under the impression that we're seeing the same kind of numbers we were seeing, say, 6 months ago. So the psychology of, wow, this might be a better time to get my home sold than a year ago hasn't really sunk in yet, and not a lot of people are talking about it. So we will either see, I think, things stabilize, stay flat over the next month, or perhaps go up just a little bit, but I don't think it'll be a substantial change. Now let's go ahead and take a look at the listing information, how many homes were added to the market. Now, again, this is a relatively flat number, but still on decline. You can see over the course of the year that it was just above 70 in November of 2007. Now it's just a little bit below that in April of 2009. And remember, we're still fighting off some pretty strong listing tendencies that were in the middle of 2008. So what can we learn anything from this statistic? Let's take a look back at April and see that we had some increased listing tendencies in February. January was up, obviously, from December. We see the same relationship between December and January, but I don't think we see enough of a trend for us to really get an idea of where things might go. Last year, we did see a big jump in May of listings, and that tends to happen in May, where you get an increased number of homes going on the market as folks want to get their homes sold in June, July, and August. And again, I think, as I said before, that would be the last month we'd potentially see a big jump in that, which might increase inventory numbers. Let's go ahead and take a look at sold numbers. This is clearly heading for better numbers. Look how low we were in November of 2007 and where we are now in April of 2009. Things have really just sort of ramped up. Now, to sort of inform these, let's go ahead and compare month to month, March to April of 2009. Now, inventory decreased 4.28% in April. Compared to March, and that was 11 fewer homes in inventory than in the previous month. Number of homes listed dropped 14.71%, so that means 10 fewer homes were listed in April than in March. Sales went up 31.03% in April compared to March. That's 9 more homes sold in April than in March. That's amazing considering when you think back to like January of 2008, the difference that we're talking about of 9 homes being sold. In January of 2008, we actually had about 7 or 8 homes sold. So we're actually exceeding the total number of homes sold about a year ago, just in the difference between last month and this month. So it's pretty encouraging news as far as the amount of attention the market's getting from buyers right now. Now let's go ahead and jump into the short sales and foreclosures numbers. This is also good news for Morgan Hill. Morgan Hill is one of the more hard-hit areas when it came to short sales and foreclosures. If this is what this is where we are now, conventional properties made up 50% of the homes that sold. Short sales made up 13%, and foreclosures made up 37%. Now, if we look at last month, we can see that's for just 1 month of numbers, that's a pretty big change. Conventional sales grew by 5%. We can see that short sales dropped by 4%, and that foreclosures dropped by 1%. So an overall drop in short sales and foreclosures is a good thing. This is also reflecting the change that we were seeing in the county level. We're actually doing better than the county in general, surprisingly enough, when it comes to the ratio of short sales, foreclosures, and conventionals. But short sales, foreclosures stayed the same countywide, but short sales dropped by a couple of percentages that then were transferred over to the conventional sales for the county. So we're actually doing a lot better than the county in terms of the ratio of short sales and foreclosures to conventional sales. So that's good news for the Morgan Hill community. Now let's go ahead and take a look at home prices over past years. Again, this is just the month of April, going back from 2009 all the way to 1999. And we can see how dramatically we've been hit. Now, the dramatic drop has slowed between 2008 and 2009, which is pretty good news. The average home price is down 6.05% from the same time in 2008. That is a dollar value drop of $40,487. Then that gave us an average home price of $628,621 in Morgan Hill. The median price of a home was at $581,000. That was an 11.30% drop from the same time last year, a dollar drop of $74,000. And you can see that it's a fairly, we're talking some pretty decent numbers here. There's not a huge difference between the median and the average. The median is a little below the average price in April of 2009, which reflects folks buying a larger number of homes that were below average in price than either at or above the average sales price. It's still a healthy number. You can see there have been some years in the past where they were almost virtually equal. For instance, in 2004, we saw that for all intents and purposes, the average and median were the same, which meant that the same number of homes sold above average price as sold below average price. But this re-emphasizes to us, and it's also actually improvement from previous months. We'll see that in a second, where we had some big disparities in the median and the average price, as folks were tending to buy a lot more homes that were far below the average with a lot of the short sale and foreclosure properties that we were seeing get sold. Now, let's go ahead and take a look. You know what? Before we move on, let's also talk a little bit about the highest and lowest price homes in Morgan Hill. Now, the highest priced home, single-family residence, was at 1524 Painted Feather Court. That home sold for $1,250,000. It was originally listed for $1,849,000. It was on the market for $394,000, and when it finally sold, it was a short sale. I've actually been in that property quite a few times. I showed it, and the biggest problem with that particular property was it was always listed a little bit above ask, a little bit higher, too high priced, frankly. It's a beautiful home, and it's a really good example of where the price can really negatively affect your ability to get your property sold. Despite the fact that it was a beautiful home, it was a newer home, really nicely laid out, beautiful backyard. No reason why anyone wouldn't want to buy that house. The bottom line was no one was taking that critical look and realizing, there's nothing wrong with this home. It's staged beautifully. It shows wonderfully. The only reason that home wasn't selling was of price, and it just unfortunately took folks a little bit too long. If this home had been priced right the first day it was listed, it would have sold for more than what it ended up selling for, which is $1.25 million. Now, the lowest priced home, unfortunately, I never did get to see this one, but it was at 16235 Church Street, sold for $349,000, listed for $409,000 originally, and it was on the market for 184 days. Now, the average price per square foot in Morgan Hill for the month of April of 2009 was $262.16. That was down from last month's square foot price of $270.53. Now let's go ahead and move on to just past months of home prices. Let's see here. Now, this goes back to November of 2007. You can see that the trend here isn't hard to figure out. That is definitely a decline in price. And again, but that's what's caused the robustness in sales that we've been seeing in recent months. The change from March to April was an increase of 0.16%. That was a dollar change of $1,008. My feeling is that on a year-to-year comparison basis, or at least from a month-to-month basis, I think we'll start seeing more indicators like that, where we see very mild changes in what the average price is, at least when the sample is large enough. Now, Morgan Hill is small enough that sometimes we'll see some really strange months where the number seems to go really high because one very expensive home has sold, and that happens in times like, for instance, June of 2008, we had a situation like that. But by and large, I think when you really look at the numbers, you're going to see that instead of seeing these double-digit increases in home prices year to year in most communities, you're going to start seeing more rational increases in home prices, or even more stability where it only goes up 1% or less. Now, the median price change. Let's take a look at this. You can see that there's been a little bit more fluctuation in the relationship here, and in the past, there tended to be a greater emphasis on properties below median price. You can see that in the case of, say, for instance, March of '08. You can see it a little bit more in June and in July and in September. These are months, and then, of course, in January. These are all times that January is sort of a borderline period, but you can see there's a little bit more emphasis on properties being sold farther below margin or farther below average price, and that just sort of reflects periods when we were seeing properties selling that were short sales and foreclosures, and they were dominating really what was going on in the market. Now, the median price change was up 9.42%. That's a $50,000 increase in median price. Let's go ahead and take a look at the days to sell. And again, this will be year-to-year comparisons, so April to April comparisons going all the way back to 1999. You can see we're up to 181 days, and that's a slightly artificial number, and we'll talk about that a little bit more in a second. Now, the days to sell changes up 42.52%. That's 54 more days to get a home sold in April of 2009 than in 2008. The lowest days on market was 5 days. The longest days on market was 928 days. Yes, 928 days. And the next closest was 506. So the next closest was almost half the amount of time of the first one. Now, so there's a couple of things going on here. Obviously, this 928-day number is throwing things way out of whack as far as increasing the average days on market. But this is also something we're going to see as a trend, despite the fact that we're going to, and because of the fact we're seeing increases in sales and reductions in the inventory, because we're selling off some of these properties that have been languishing on the market forever. We're going to see that the days on market is going to artificially increase. It's not really artificial because those homes really were on the market that long, but because we're finally flushing things out, some of these really ancient listings that are in the multiple listing service are finally selling. So it doesn't really give you an entirely accurate perspective. If you're a seller who's using these numbers, or a potential seller using these numbers to try and figure out how long about will it take to get my home sold. Well, if you do things as poorly as some of these homes that took 900 plus days to sell, then that's how long it's going to take you. But if you get yourself a good agent who knows the markets, who can give you the right price to get that home sold quickly, what is the real average? I mean, but one home out of 38 that sells in 900 and something days doesn't define a market. Let me give you sort of a breakdown here of how things came out. Now, no homes sold before they were put onto the MLS. That happens in pretty strong markets where homes will actually sell before an agent even gets a chance to put it in the multiple listing service. 4 homes sold in 1 to 7 days. 8 homes sold in 8 to 30 days. 2 homes sold in 31 to 60 days. 2 homes sold in 61 to 90 days. 9 homes sold in 91 to 180 days. And 13 homes sold in over 180 days. Now, 31% of the homes that sold in April of 2009 sold in, 31% sold in 30 days or less. So a full 1/3 of the homes out there, almost a 1/3 of the homes out there that sold did so in less than 30 days. So that's pretty good news. I think the realistic number, if you're a seller out there who's thinking about putting your home on the market, I think the more realistic number is closer to what we saw last year, just because of a couple of an insanely long periods of time that a couple of homes that sold had been on the market. I think the real number for you, if you're thinking, if I put a sign in front of my house right now and I have a decent agent who's doing what they need to do to get the word out, I think you're looking at 90 to 100 days to get a home sold, potentially. It could be a whole lot less. There are plenty of examples of homes there that have sold in a lot less time. A lot of that depends on the condition and the competition. What are the other properties at your price point offering? So much of that comes into it. It's hard to pin down. If you're someone interested in potentially selling your home, go ahead and give me a call. I'll be happy to do a market analysis for you and figure out what the right price is for you and what the best approach is to get your home sold. Now let's go ahead and look at these same numbers going back months. Let's see. So we're going back all the way to November of 2007. And we can see, I think that general trend of increased days on market is accurate. I think it's not taking as long in some cases. Again, it's really specific to your home, but I don't think that the dramatic level of increase reflects the reality of how long would it really take you to get your home sold in April of 2009. Again, I think this is just an example of when you start seeing an increase in sales, you see an increase in days on market because you're selling off properties that have been on the market for an extremely long time. So for right now, I don't think anyone should get concerned when they see the days on market numbers for Morgan Hill. In fact, I think these numbers are just going to get worse as we sell more and more properties. I think that's naturally just what's going to happen. And it's what has happened in previous down markets as we come out of the down period. Now, I do appreciate you all taking the time to review these market analysis presentations. If you'd like to look at any of the other ones I've done, or if you'd like to listen to my weekly podcast or reading of my articles on real estate, you can find all of those at www.soldbyrobert.com. Via email, just send those off to robert@soldbyrobert.com. If you'd like to call me by phone, just dial 408-852-0525. If you're using AOL Instant Messenger, Google Talk, or Yahoo IM, my screen name is The Rebel Broker. For Skype users, Rebel Broker is the screen name, and referrals are always appreciated. If anyone you know is interested in real estate in the Silicon Valley area as a buyer, investor, or seller, please get in touch using any of the methods I've listed above, and I'll be happy to help you any way I can. And if you're anywhere in the United States and you're just trying to find a good agent who'll do a good job for you, give me a call, and I'll track down the perfect agent for you. Thanks, and I will talk to you all next time.